Hi there, I'm Mark Sebastian, the founder of OptionPit.com, and this is the AM Volatility Report. Reminder, this is for educational purposes only. Consult your financial professional. Options have risk. Well, here we are. We got some earnings out. We got some good earnings, some ugly earnings, but the S&P is down 2. We're right at the level where markets need to decide whether they're going to break higher or turn right back around. Take a look at this chart. And we are right at the level. So the question is, can we break back above kind of this, call it 2115, 2116 level in SPY, in the SPX? We're looking at, 2160, 2161. Can we get 10 points higher to actually break things out? If that happens, we could see a serious deterioration of volatility. I mean, we've already seen a serious deterioration of volatility. Take a look at VIX. It's been on a free fall. VVIX has been on the free fall of free falls. I mean, that's just incredible. The drubbing that thing has taken in the last few weeks. I mean, it got as high as 108 and is now 85. All right, and all this through S&P 500 chop, just chop, 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 nothing going on. Right? And so, with all this chop, where is it coming from? Well, you can see oil chop now, gold chop, even bonds are chopping, right? The 200-day chop. All the strength in the markets has been financials. You look at like Goldman and JP Morgan, that's been the strength. All right, that has absolutely been the strength. And so, that is what's been driving things. There is a real choppiness to the market, and it's directionless. Hasn't been doing anything. We break out, and I think it's going to be higher. We could see a serious move. Now, why do we think we're going to break out higher? Well, I've said this a few times, but the more I see it, the more I think it. Look at the last couple of weeks. I mean, we've had the choppy market with vol just dying. I see something like that, I see breakout higher, and I think we're lining up for that. And we're absolutely lining up for a breakout. We've got some big earnings this week that could obviously change things, but I mean, what do we not know about Apple? Apple volatility is cheap. About the only thing I can tell you about Apple. Now you look at 60-day vol on Apple. Look at it on a year-over-year basis. It's at 22%. Outside this little dip here, this is normal. And this is into earnings on 30 after the bell today. They're begging you and me to buy December or January options and maybe sell some weekly stuff against it. I mean, here it's trading 118, and the 120 calls are under $3. Do you think the stock's going up? Those calls are probably too cheap. Meanwhile, the weekly, those 120 calls are $1.70. I mean, the calendar, I can put on a diagonal a 120, owning December, selling October, expiring Friday. 2-point diagonal under $2. It's unheard of. That's how out of whack and how unbid back month stuff is relative to front month. So there's edge in that trade, in my opinion, in developing the long exposure. Bank stocks have had a nice rally. Gold financials have had a nice rally. Everything else is kind of off. So it's been a rally led by large cap. We'll see how much longer it lasts, but that's the way things are rolling. On the day, I think we move higher. I think we do break out. I think we're lined up for a nice run into the election. That's the way I kind of feel it. All right, guys. On that note, I hope everybody has a great day, and I will talk to you soon. You got questions, you can email me, mark@optimus.com. You can email me, 888-TRADE01.